for all verified facts. Subscribe to our YouTube channel and click the bell icon to get the latest updates.
Hello and welcome. On the 31st March of 2019, there were over 936,000 crores of bad loans on the books of Indian banks. Of this, over 790,000 crores or close to 790,000 crores were in the books of public sector banks predominantly owned by the government of India. So how did the situation get to be so bad? What were the warning signals that were there earlier, and were those warning signals heeded? And if heeded, were they responded to? And why did this happen? Was it to do with promoters or founders who were maybe not having the best intentions, or did it happen because of external environment conditions, or was it a combination of both? A new book attempts to and answers many of those questions, and I'm pleased to be joined by Vivek Kaul, author of Bad Money Inside the NPA Mess and How It Threatens the Banking System. Vivek, thank you very much for joining us.
Thanks, Govind, for having me. It's a pleasure.
Right.
Indeed.
So first question, Vivek, what is a NPA or non-performing asset?
NPA is basically, what in common parlance is called a bad loan. And a bad loan is essentially a loan which has been defaulted on for a period of 90 days or more.
So how did we end in a situation where we have so many bad loans and that have now survived and thrived in a way for so many years?
So basically what happened was, at least the common perception is that a lot of it was because of crony capitalism, which is partly true, but which is not the only reason. I think the main reason behind bad loans lies in the fact that I guess 2000, 2004 and 2011, there was a lot of euphoria in the Indian economy, and the bankers as well as the corporates got carried away in that euphoria. So the bankers ended up lending more than they should have, and the corporates ended up borrowing more than they should have. Now, the euphoria stemmed from the fact that India had been growing constantly at a rate of higher than 8 to 9%, and so the assumption that was made that this growth will continue and we will become the next China. And because we will become the next China, obviously, we can take on this loan and start these new projects and then repay those loans, in the years to come. Now, the problem was that, neither did we become the next China. And also what happened was that a lot of these projects never got started because, the classic Indian, bureaucracy and red tapeism sort of came in. And then everything started to go haywire. From 2011 onwards, though the actual recognition of this started only a few years later.
Right. So tell us about these bad loans. So you've got a chapter on Nirav Modi, and so for the public at large, the association with bad loans is Nirav Modi, in a manner of speaking. So is that true?
Right. So, I mean, Nirav Modi and Vijay Mallya to some extent, to a large extent, essentially are, at least in the minds of people, the villains of the piece. Now, which they are. I mean, there's no denying that. But when you look at the, the overall defaults, and when you look at the overall corporate defaults, you soon come to the realization that, Modi and Mallya are essentially what we would call small fry. I mean, there are bigger guys out there who people haven't even heard about. So, whenever I sort of talk to the public, one of the sort of questions I ask them is, can you tell me who is the biggest defaulter of them all? And at least till date, no one's answered that question. And the answer is, the chairman of Bhushan Steel. So Bhushan Steel defaulted around more than 56,000 crore, and the gentleman's name is Brij Mohan Singhal. So nobody has heard of them. And if you sort of Google him, you will barely get any images. So, what basically happened was, in case of Nirav Modi and Vijay Mallya, because they had, lifestyles which were so much out there in the public domain, and probably they needed it in order to market their brands and their companies, they essentially became villains of the piece in the minds of people. Whereas if you sort of dig a little deeper, you will realize that there are bigger defaulters out there who no one's really.
But are all defaulters the same, Vivek? I mean, did they willfully default, as we, the term that's used quite often?
See, that's it's very, very difficult to make that. I think it's very binary in nature once we start making that comparison. Once a default has happened, whether it happened because of business circumstances or it happened because the owner had siphoned off money, is something that can only be established through forensic accounting. And we really haven't really gone down that lane.
Right.
But in a lot of cases, if I may say so, without really naming people, I think the defaults were because the guys were politically well connected, and also because they had defaulted and gotten away with it in the past. So.
Right. So Vivek, this is a large sum of money. As of 31st March 2019, like I said, it's over 9 lakh crores. Where is this money gone?
So, I mean, that's a good question. No, in some cases, it's simply been siphoned off. In some cases, projects have been launched and it's been abandoned. And I mean, that's how it is basically. So someone obviously has benefited from all that money at the end of the day, because that money has left the coffers of the bank and gone to these corporates. So.
No, so has it been actually spent in erecting something, and that of course lies unfinished, as you say?
I mean, so in case of, if you look at real estate companies, yes, it has been spent in making a plant or something. In case of steel companies, also the money has been spent. But what obviously happened was that after a period of time, steel prices actually started to come down, and then they were not in a position to repay these loans. So.
Right. So you've also said in the book that, now we have the Insolvency and Banking Code, the IBC. So does that now prevent such defaults from happening in future? And overall, are things different today than what they were earlier? Are we in a position to prevent such new holes from, developing?
Right. So, I mean, thanks to the IBC, the situation is a little better than it used to be. At least when it comes to the larger defaulters, there have been some recoveries, and the recoveries are better than what they were in the past. So, you have examples like Bhushan Steel, or you have SR Steel, which ArcelorMittal bought. So the recoveries in this case were pretty decent. But the moment you start looking at the smaller cases, you realize that there are barely any recoveries happening. And most of these smaller defaults are essentially going the liquidation route. Now, what that means is that the assets of the company are essentially sold, one at a time. And India doesn't really have a system for anything like that. So the recoveries in case of a lot of these small companies, which one doesn't really, follow, are close to zero. So that end of the system needs to be sorted out. Also, the third thing that is happening, and I think that's the biggest gain of the IBC, and which a lot of people don't talk about, is the fact that owners now have this fear of losing their company. And that fear, I mean, if it is allowed to work properly without, the politicians diluting the IBC, will do more benefit in the long run than all this recovery business. So.
Right. So banks are more alert. The central bank, which oversees all the banks, is hopefully more alert. Is there any other part of the system that should be more alert so that I, as a depositor, feel more comfortable? And I'm going to ask a depositor question also in a moment.
Yeah, I think the depositor himself needs to be more alert, because, and I say this with a lot of evidence. I mean, you and I both stay in Mumbai. And if you know that the Punjab and Maharashtra Cooperative Bank, which is a cooperative bank and not a scheduled commercial bank, was essentially, essentially has been in a huge mess. And in the last, I think it's been close to a year now, depositors haven't been allowed to deposit all the money that they have in the bank. And the limit as of now, I think, is at rupees 1 lakh. And that you constantly keep hearing, keep reading stories in the local tabloids about people who need money do not have access to the money. So I have read people who have committed suicide. I have read about people who have died of heart attacks. All people who haven't been able to get their children married. This is because they had all their money in one bank. No, so there was this video going around, after the entire thing broke through, of this woman who was a teacher and who said on record that all my savings of 25 lakh rupees are in this bank. Now, my question, and I mean, this is it might sound like a very stupid question to that woman and to everyone who does something like this, is, if you have the ability to sort of earn 25 lakh rupees, why have all of it in the same bank? So I think at the depositor level, there is, there needs to be greater education and understanding of which banks you can bank, should bank with, and which banks you shouldn't bank with. Now that understanding is clearly not there, because the assumption in the minds of the depositor is that banks are safe. So.
Right. So that was my last question, Vivek. So is my money safe? I mean, I have, let's say, deposits in maybe private sector banks, maybe public sector banks. It doesn't appear that I'm any more safe in as a genre in public sector banks compared to private sector banks. So how do I then make a call going forward?
Yes, I mean, see, I mean, we live in an era where no bank is going to go bust. I mean, that is for sure. As long as you're dealing with a scheduled commercial bank and not, and not with a cooperative bank. The problem with cooperative banks is that there are good cooperative banks out there. The problem lies in the fact that there are so many of them that it is essentially impossible for a depositor to figure out which is a good cooperative bank and which isn't. In fact, it is even impossible for the regulator to figure that out, because there are so many of them out there.
Right.
So I would essentially, say that, it is better not to have money in cooperative banks. Or if you feel that there is a certain ease with which, cooperative banks deal with you, have a little amount of money for your daily use, whereas the bulk of the money should be in a good scheduled commercial bank. Now, what is a good scheduled commercial bank? I would just look at essentially one parameter. And people get back to me with things like, okay, but how do we do this? We don't know. But it's very easy. All you need to look at is the bad loans rate of a particular bank. And this information is easily available. You can Google it. It's available as a part of the investor presentation that banks release every 3 months along with their results. So, and if the bad loans rate of a bank is greater than 10%, and there are lots of banks out there like that, I wouldn't have my money in that bank.
Right.
So that is a cutoff that, I would establish, and I would, and this is not to say that, banks will not repay or they will default. But, what happens if a bank is put under a moratorium, like Yes Bank recently was? And even if it is a matter of few days and you need that money at that point of time and you cannot withdraw it, then that money is essentially useless, because money is of use only when it is needed. So that is something that is a possibility that depositors need to keep into account and act accordingly.
Right, Vivek. Thank you so much for that. So, Bad Money Inside the NPA Mess and How It Threatens the Banking System by Vivek Kaul, out now on Amazon as well as in bookshops if you can access them. Buy it. A special our call out to financial journalists and my brethren to read this book. It can be a little unkind to all of us, but